Hi, this is Cayden from VIA Value Investing Academy. Now, welcome to another evening of our deep dive series, right? So maybe let me have a quick look at the YouTube live. There are about 42 people watching the video right now. So I suppose, after a while, the 42 will become 420. But before I start, just I was making the preparation for start, I was thinking, wow, how come there's another YouTube live? Like recently, I've been doing this YouTube thing for quite a long time, Yeah, but it's okay. I think I still enjoy sharing things that are very exciting, Now, before I jump into the so-called the actual topic itself, I share with you one small little incident, right, that took place yesterday night. Now, yesterday night we run our value investing masterclass, where we talk about the basics of investing and so on. So the crowd is pretty good, right? But what caught my attention was there were two young fellas. By the way, it's a real story, right? The two young fellas were just sitting, how should I say, right in front of me. Yeah, so the first row, usually first row is empty, like the Chinese 7-month is empty for the brothers, right? Yeah, but the first row was empty, and then suddenly on one side, which is on my right, there were two young chaps. So when the class was starting, they caught my attention because they look pretty young, they are young. So I asked them, hey, how young are you? So one person say he's age 20, and he's studying in poly. Then I asked the other one, how young are you? He said that he's age 19, so it's 19 and 20. So this 19, right, he said right now he's studying ITE. And because he said it in front of the class, I don't want him to feel like, oh, I'm ITE, not so good, right? So I told him, don't worry, one day you'll own ITE. Wow, so for a moment he was quite happy. Then, they'll listen to the class very attentively, so two of them really take serious notes. Yeah, whereas the adults a bit bo-chap, right? Yeah, this one I know. But the two fellas were, yeah, so remember they are 19 years old and 20 years old. And I'm 50, I'm 50. Yeah, so the difference between me and the young one, the 20 years old, is 30 years. 30 years. So I told the two young men, right, I say if they start investing at this age, even with a small amount of money, there's a high chance that even before they reach my age, they most likely will be a multi-millionaire. So they're quite happy, so they listen and so on. Then at the end of the class, I expect them to leave, the two of them to leave. But they stay back, chit-chat with me, and then eventually, interesting, they enrolled, into our value investing program. Yeah, so I was a bit shocked because they were 19 and 20, so I was thinking, where do they find resources to do this, right? So I chatted with the young man who's 20 years old. I say, if you don't mind, who is going to pay for this? Because I noticed that they're too young to have credit card. Yeah, so he used his debit card to invest in the training. Debit card, debit card is not credit card, right? So you cannot buy things on credit, so debit. In order for him to settle in debit, that means there must be one small little sum of money in his bank. So he said, I make quite good money in crypto. Yeah, crypto. Wow, so it was quite interesting. Wow, like that also can. So my mentality is Warren Buffett's mentality. It's a non-productive. It's like you buy crypto, so gambling, right? Speculative. So I say, I see, if you don't mind, you tell me how much money you make. He said $10,000. Wow, see, $10,000. You see, Irfan also want to buy already. Yeah, so he said $10,000. Wow, for a moment, I think I also want. So I asked him, if you don't mind, how much do you get started? He said he started $100. So one more time, it's a real story, Yeah, by the way, I'm not going to promote any crypto trading. I'm just saying this as a story. So he said he turned $100 to $10,000. Wow. For a moment, I was thinking, maybe I shouldn't buy stocks. Yeah, so he said $100 is $10,000. So I said, what crypto have you bought? Yeah. Then he mentioned this crypto. I thought it's supposed to be Bitcoin, Ethereum, something that I know. But he mentioned this name that I know nothing. I never heard. It's definitely not the top 10 or top 20 crypto, something that I never heard of. So he said he put $100 in about 4 months. So 4 months he went $100 to $10,000. Wow. So at that moment, I was feeling a bit excited. So anyway, he finished his administration for the training, right? Then on his way back, as in he want to walk back to take his bag, want to go back home. So I was jokingly talking to this young man. I say, why don't we play a game? So he said, what game? I told him, I give you $1,000. Because you started with 100, right? You turned 100 to 10,000. I said, I give you $1,000. If you lose this $1,000, it's all on me. It's on me. But if you can turn this $1,000, right, to that 10,000 or 100,000, we split. You take 50,000, I take 50,000. Wow, then he was shocked. I say, don't worry. $1,000 is only a bit only. So I say, you go back, sleep over it, right? And during the maze training, make sure they sit in front. Then I ask you again, Yeah, but by the way, I'm serious. I don't mind giving 100. Let him go and play with it. Now, so I talk so much. What has it got to do with tonight, right? The deep dive series. So right now, I've already shared my slides, right? So I just need my team members' help to put up the slide. Now, if you look at this slide, just how the storyline was about crypto, right? And tonight is really about crypto. But it's not just crypto, right? It's crypto, inverted commas, bank. So about maybe a month ago, if you look at this slide, 70th of February 2022, then there is this heading, years after calling Bitcoin rat poison. Yeah, it's actually Charlie Munger. So Warren Buffett just invested $1 billion in the crypto-friendly bank. Wow, somehow it links back to the story that I was talking about. Wow, this one better. This one is Steven, right? This Steven, in his past life, he must be a Singaporean. Because he said something like, wow. You know what I mean? Must be a Singaporean. He said, wow. Did Warren Buffett invest $1 billion in rat poison? Yep, here's why. So the article came. Then there's one more. Has Warren Buffett now become or became, right, a crypto believer? Yeah. So tonight is really about, actually crypto is only a very small portion, right? But rather we want to talk about the bank, right? So the so-called bank that somehow relates to cryptocurrency, right, is actually called Nubank. So in other words, this NU, right, is pronounced as new. Yeah, I was thinking, is it new or new, Yeah, so I went to YouTube and figured out they pronounce it as new. Okay, so I'm going to pronounce it as Nubank, but it's NU, NU. So now the question is Warren Buffett the one that put his money into Nubank, right? Or is his company the one, which is Berkshire Hathaway, that invests in this Nubank, right? Yeah, so but before we carry on, let me do some disclaimer, right? Now, it's a long thing, but I'm just going to read this part. So remember, right, in no event shall VIA or any author, which is me, and then my colleague, right, which is Hillary, be liable for any viewers, guests, third party, all of you watching this, for any damages of any kind arising out of use of any content shared here. So remember, right, neither my cases, investment management, VIA, nor me or Hillary are operated by affiliated with any broker, dealer, licensed financial advisor. So in short, we are just sharing about this Nubank because we are passionate. We're not sharing because, hey, please buy this, something like that. So this is a disclaimer, right? So let me just get started. So remember, right, Berkshire Hathaway bought this company. So if you look at this slide over here, this is actually the purchase history, right? So now the question is, when did Berkshire bought this company? They actually bought it in the last quarter of 2021. It was a new buy. That means Berkshire bought this stock for the very first time. It's not an additional add-on, right? And the average purchase price is about $9. Just to let you know that right now the share price is about 7, right? 7, And then, yeah, of course, the current share price is about 7, which means that if you buy, remember this is not a recommendation, that means if you buy, you're actually like 30% smarter than Buffett, right? But don't go and press buy. I'm just saying this for fun, right? Yeah, so actually, after Warren Buffett bought, actually the share price dropped, Share price dropped, Interesting, So it doesn't mean that you buy share price drop is your fault, right? Yeah, so, share price just move up and down. And the number of share purchase is about 100 over 1,000. But remember, 100 over 1,000 means nothing. To us, it may appear to be very big, but take note, right? This purchase is only 0.3% of its entire portfolio. It's like you're making, it's like your salary is 4,000 or 5,000, right? Then one day you decide to take, let's say, $100 to go and buy a lottery ticket. Yeah, so you're already mentally prepared. If you use this $100, if you lose $100, it's like me, right? Passing the 1,000 to the guy, right? Yeah, so it's only a small fraction. Yeah, so remember, this is only a small fraction. It's like a lottery ticket, right, to Buffett, or at least Berkshire. Now, this is another document which shows the Nubank, right? Nubank inside Warren Buffett's portfolio. Remember, 0.3% new buy, right? As compared to Apple, you look at Apple. Apple is almost like half, it's 47%. Yeah, so it's really a lottery ticket. Then you can see other lottery ticket. I see Activision, right? So remember, right? Don't go and follow Warren Buffett shamelessly. And then when his is a lottery ticket, you sell a house and go and buy Nubank and Activision. So there must be some form of asset allocation. Now, don't mind, I just share with you another bad incident. Now, even if you want to follow, we also need to follow wisely. You don't follow like shamelessly, right, without thinking. Because many years ago, there was one stock, right, that one company, I followed Buffett until lose money. Yeah. And then, the company is called IBM, actually. IBM, yeah, follow until lose money. Then after that, I become very skeptical about Warren Buffett's purchase. Yeah, so he purchased the airline. I become very skeptical. Luckily, I didn't buy. No. The pandemic came, the share price dropped, he cut loss. So I say, hey, I didn't do it. So remember, I'm just showing you what he do, right? This is like a lottery ticket, huh? So let's learn from his lottery ticket bet, okay? Now, remember, Berkshire has two key persons. One is Warren Buffett, which is the chairman, and then his buddy, right, which is Charlie Munger, is the vice chairman. And within Berkshire, he has two successors. Yeah, one is called Todd Combs, right? Age 51, who is the investment manager of Berkshire, and he's also the CEO of Geico, which is a motor insurance company. And the other one, the next successor, is Ted Weschler, age 60. Yeah. So I'm not very sure who. Is it Warren Buffett who bought this company, Charlie Munger, Todd Combs, Ted Weschler? I'm not very sure because all the articles didn't specifically say who is the one who made the decision. But I'm just guessing, right? There's a high chance that his successor, Todd Combs or Ted Weschler, may be the one that makes the decision because the amount is pretty small. So if you're the investment manager in Berkshire, you really have to analyze the company and so on, right? Yeah, but there's one fella in Berkshire that's most important. Yeah, so who is this important fella, right? This person simply allow these four fellas, right, to work for him for free. And this fella is none other than myself. Okay, I mean, this is a lame joke, right? So in other words, if you buy Berkshire share, these people actually practically work for you, right? You buy Sheng Siong share, Sheng Siong boss work for you, Okay, So remember, we are not sure who bought. Maybe one day we'll know, but as of now, we are not sure. Now, so let's dive into this so-called crypto bank, right? Is it really a crypto bank? Yeah, so today's series, remember, is deep dive, right, into this bank called the Nubank. Now, so what is Nubank? Yeah, so before we pump money to something, especially our hard-earned money, we better know what are they doing. So what, right? Now, just to let you know that they are the largest neobank, right, in Latin America. So, of course, the next question is, what is a neobank? And which are the countries that are in Latin America? So, first one, remember a neobank, right, is an online bank and it's internet basis only. So, it's a type of bank that operates exclusively online without a traditional physical branch. Now, if you look at the local banks such as DBS, all this, when they first started off, right, was just one site. They have a physical branch and so on, right? Then eventually they move from the traditional branch, or sometimes we call it brick and mortar type of business, to an online business. So right now, most of the brick and mortar would have an online presence. So brick and mortar to an online presence. So Walmart in the early days was brick and mortar. Then they start to sell things online. I think it applies for Sheng Siong, NTUC, and so on. But if you look at Amazon, right? Amazon development goes the other way. So they started with online, and then after they reverse, they start to have warehousing, and brick and mortar. So some is brick and mortar to online, some is online to brick and mortar. But for this fella, right, Nubank, right, is purely online. There is no traditional physical presence. So what does that mean? If you go to any DBS bank, you see there's it's an office, right? Imagine the early days, they have this DBS bank just across the road, Shenton Way. Imagine the rental, it was a huge space, So number one, if you have physical bank, you expect rental, right? Then the second one, you need to put a human being over there, right? Every counter need to have one human being. Yeah, but before we go into detail, can you imagine that right now they scrape off all this, they will have safe rental, they scrape off the manpower, everything is all online, right? Yeah, later we'll go into detail what makes so-called a new bank, which is an example of a new bank special, right? Now, they are still their presence is still very small, right? They currently only operate in 3 countries, which is Brazil, Mexico, and Colombia. So what does that mean? It simply means that they have rooms for expansion. It's like in the early days, Red Dot only got one shop and one corner in Bugis, right? So right now it's all over the place. And if you look at Latin America, there's so many countries, and out of so many countries, they're only in 3. Yeah, imagine if they are able to expand. Yeah, so the amount of money that they make, it may be 10 times, 20 times. So these are the 3 countries, and they are backed by notable investors. Now, be very careful about this. I'm just putting a statement, right? Backed by notable investors such as people like Peter Thiel, right, which is a very famous investor. Now, for this sentence, you have to be very careful. Now, like for example, I remember there's one restaurant. What's that restaurant? Oh, the Salt Bay restaurant, right? Salt Bay. Salt Bay sells overpriced beef and so on. So he take the beef, right, and then he put a layer of gold. And then after that, he 10 times the price. Then after that, he will appear from nowhere, right? Sprinkle the salt across his dirty elbow, right? And then you pay 10 times the price. Yeah. So this company is actually backed by Temasek because Temasek actually bought salt-based restaurant. So be very careful, huh? Doesn't mean that if Temasek buy, you have to buy. So be very careful, right? The reason why is, if you look at this news, do you know this lady called Elizabeth Holmes? Yeah, she started a very famous, or right now become infamous company called Theranos. So during a time when she started this company, her company was backed by a lot of people, including senators and so on. But where is it today? So be very careful when somebody say, hey, this company is backed by who? It doesn't matter who does it back at. The key is it a good company or not? Okay, so take note, these are some basic information. And they only launched recently, right, in 9th of December 2021 on New York Stock Exchange. And just take note, when they launch, right, they are the largest online bank in Latin America. Quite interesting, huh? Yeah, so these are some of the founders. So why was the big deal, right? Why is there such a hype and then Buffett interested in this, right? Now, one of the key reasons why this new bank, right, was created, because if you look at the geography over here, right, you'll realize that the amount of population over this part, example, 65% are unbanked. Unbanked, that means they don't have bank account and so on. Then 90% have no credit card. Yeah. So if you look at all this, 30% unbanked, 73% without credit card, and then so on. Now, if you look at Singapore, I think most of us will have at least one bank account. Yeah, which means that if government grant and not license, I mean, the customer is really taken by somebody else, right? But here it's like a untapped, it's like a virgin forest, The forest still not cut yet. Yeah, there are still a lot of people there, don't have a bank account, don't have a credit card. So which means that this is the opportunity for them, right? Because they found that, hey, nobody have a credit card. So this is one opportunity. The second opportunity is because of the pervasiveness of mobile phone. So now I got mobile phone, and interestingly, you don't have a bank account or credit card, right? Then these two dots start to connect, Then, of course, the last thing, right, is the services, right, for the existing brick and mortar banks in the Latin America sucks. So number one, there's a room for growth. Number two, in terms of infrastructure, they are ready, right, because mobile phone. And then the third one, the service sucks. So how do you connect these dots together, right? So we must understand that what is a business. Now, a business is simply an entity. They provide a service or a product, right, to solve a problem that customers are willing to pay. Yeah. So right now there's a problem. The infrastructure is ready. Yeah. Then there's a lot of people who doesn't have a bank account. If you connect these three dots together, wow, really, the virgin forest is really huge. They can really cherry pick, right? But let's hear it. Let's hear it from the founder, right? Yeah. I'm going to show you this video later on. But anyway, this video was on the 9th of December 2021. And then later on, when the video is playing, you can hear the tang, tang, tang at the back, because it's a debut, right? Launch of the IPO. So I think the best is to listen to the CEO. But before we play the video, right, just take note, you have to pay attention to what the CEO say. Remember, the CEO want to, talk about his stocks, right? So he will say all the good things. Oh, this is what we're going to do. This is a growth. We're going to solve a problem and so on. So the video is actually quite long, about 7 minutes, but we're going to stop at 5 minutes sharp. So 0 to 5 minutes. Okay, so just watch this video. Very, very important. Yeah, thank you.
One of the biggest IPOs of 2021 has arrived. Brazilian digital bank New Holdings has raised $2.6 billion, valuing the company at a staggering $41 billion at its IPO price. That makes it the world's most valuable standalone digital bank. The company does business as Nubank in Brazil, Mexico, and Colombia, and was backed in June by Berkshire Hathaway's Warren Buffett. Joining us now for more on the company is Nubank's founder and CEO, David Velez. David, good to see you. Congratulations on the debut. I know it's been a long time coming. For those not familiar with Nubank, set the scene for us in some of these countries you operate. What is it like for a consumer to do banking in some of these countries, and why are they coming to you?
Thank you. Listen, it's very painful. There is a lot of pain in consumer banking. A lot of these countries traditionally have had 5 banks that own 80 to 90% of all the investments, lending, credit, savings. So for a very long time, there were really no alternatives for consumers. They were basically at the mercy of the same 5 banks, which ultimately meant paying some of the highest fees in the world, some of the highest interest rates in the world. And then that's for the people that could actually open an account. Then you had other 40% of the population that were completely outside the system, which meant even more pain and a huge opportunity for entrepreneurship.
David, I imagine it was an exciting day back in June when Warren Buffett invested in your company. Did you get a chance to talk to him?
I did, yeah. I had the pleasure to meet him. I'm a big fan of him, always been. He's a phenomenal entrepreneur, phenomenal investor, so we were very proud of having him as an investor.
Is he still an investor now, and what did he tell you?
He asked some really good questions. He put me on the spot, and he had done the homework on the company, so we were very excited to have those conversations, and of course he's along for the ride, so we're very happy.
David, it's Julie here. I want to ask about your customer base a little bit because, as you say, you are increasing accessibility to banking for your customers. I'm curious what some of the opportunities, but also some of the challenges might be with these customers. Presumably, I'm guessing, you correct me if I'm wrong, we're talking about smaller deposits perhaps per customer. So are you dependent on it sort of being a volume business, on you getting a lot of customers?
Yeah, I mean, scale is important, obviously, to be able to have a lot of efficiency, to then pass that efficiency back to the end consumer via no fees and lower interest rates. So partly what we're trying to do here is scaling with a really, really good product. Culturally, we're a company that is consumer obsessed. We focus very much on that user experience, and consumers become our biggest ambassadors. They do all the branding for us. That translates into a customer acquisition that is one of the lowest CACs that we know of in the world, one of the highest net promoter scores that we know of in the world. And ultimately, that viral growth brings scale, which again, we can pass back to the consumer via better fees and interest. So, and this is both consumers that had bank accounts before, that are tired of dealing with those big banks, are coming to us, and then also a lot of consumers that had never really had access, that were putting their cash under the mattress and are excited to be able to invest well, to get a loan, to really deal with somebody that is thinking about them every day.
David, it's Brian Chung. If you're not in the banking business, you should sell jackets because those jackets are pretty sweet. I want one. But I want to ask about
we'll get you one.
The focus group. I want to ask about the market focus. Now, where are the areas of focus? Because I think one attractive offering, I imagine, for your customers is perhaps cross-border payments, the ability to transact with other countries, for example. How do you feel that plays into the strategy going forward after this IPO?
Yeah. So we're still very focused in Brazil, which is our core market, expanding our entire portfolio. We started with credit card, then we launched a savings, lending, investments. We brought an investments platform that offer over 400 different investment funds to consumers in Brazil, and we're integrating that to our app. Then with credit, we also have 1.1 million small businesses and micro entrepreneurs, and where we're starting to offer them more and more products. And very recently, we also opened our customer base for third-party financial and non-financial services partners. So, for example, we just added over 10 different e-commerces that can sell their e-commerce goods inside our platform. So for Brazil, we're very focused on that expansion. And then the other vector of growth is new markets where we are in Mexico and in Colombia. In both markets, we started with a credit card first. Both are growing very well. In Mexico, we have just become the largest credit card issuer in the market only about 10 months. So those are the key areas of growth for the next for the next few years.
You're pretty fast.
Okay, ladies and gentlemen, welcome back. So just now I was asking any VIA grads, Jocelyn replied, Tao, here, right? Here, huh? Now, if any one of you are VIA grad, maybe just for fun, right, can you just type what so that I know out of the 120, some of you are grads, huh? So while you're typing, let me just share with you, right? Now, if you look at if you have watched the video and listened to what the CEO said during the last part, it's actually quite interesting, right? But let me show you a graph, visually. If you look at the slides over here right now, right? Let me just have the slides back on the screen. Now, if you look at this line is not linear. Yeah, this slide talks about the growth of the company in terms of the number of customers. So the customers actually went up exponentially, like explosive, 10 times, 20 times, boom. Okay, so we're Kim Hao Huat. So now the interesting thing is, as an entrepreneur, I also want to learn like how do they grow a customer exponentially, right? So remember, they first started by having a so-called credit card business. So if you have a credit card, right, you may notice that there's a DBS Bank, UOB, or whatsoever. Okay, so they started a credit card business. But when they started a credit card business, you know, the number of customers very little. Thanks, wow, a lot of people are what, right? Thank you. Alicia Chang. Yeah, yesterday, the egg tart that you bought, I still haven't finished yet, Okay, then after that, there's a rapid customer growth, right? Now, boom, there's an exponential, right? So how did they grow the customers rapidly? Now remember, they start off with credit card. They are not so-called a bank yet. So I think the biggest turning point, right, is they received the banking license at this point. So do you realize, like, this is like a point of inflection, right? So the moment the license, they got the license from the Brazilian central bank, they can serve more, they can provide more services, right? Remember, a business is simply an entity that provide a service that solve a problem. Yeah, so Jason say, what until cannot recognize house, huh? Then subsequently, okay, now I have a banking license, I can focus on Brazil, right? Then after that, they start to expand their operation, right, to New Mexico as well as Colombia. And once they so-called expand overseas, again, they want to provide more services to solve more problems, right? So what they did was they start to acquire companies that so-called increase their economic mode or a durable competitive advantage. Now, over here, I think you cannot see the company name because I purposely put it vertically, but don't worry, later there's a slide that's on the horizontal mode, right? So don't worry, you don't have to twist your neck to see. Yeah, so eventually they acquire the customers to grow. So first thing, remember, credit card, banking license, expand overseas, acquire companies. These are the 4 steps. Now, this is a very interesting map. So when I look at this, I was thinking, actually, my small little company, maybe I should have a map that looks something like this. Yeah, then through, I also learned something. You see, they start off very small, right? Now, this area that's shaded in like white, right? Yeah, these are the services that they provide. Remember, they start off with credit card. Then after that, when they receive the bank license, they can do more things, personal loan and all these things, right? But this is so much they can do, right? Yeah, they can do big because they're still a very small company. So in order for them to grow big, they 2 ways. One is to acquire, and one is to form a partnership. For example, if you go to Foot Locker, you may see Nike shoes, right? So now the question is, why should Foot Locker sell Nike? Why don't they sell more Reebok? Yeah, something like that. So because Nike has some form of relationship with Foot Locker. Yeah, Foot Locker has 3,000 stores, and then Nike has 1,000. So imagine the 1,000 work 3,000. So total, you become a mega giant, you become 4,000, right? So one way company can provide more services by working with somebody else. Yeah, partnership. So you realize that when they partner or acquire companies, they can provide more services, right? E-commerce, we'll share more later on, Share more later on, right? And this whole circle represents the services that they provide. And you realize that this circle overlaps the circle to the left, right? And overlap to the circle on the right. Because whatever services they provide, it must be serving someone. So who are their so-called customer, right? So they are both a B2C business, which is a business to consumer business, as well as a B2B business. So B2C, that means they are a business, but they're serving the consumer. So B2C. And we are talking about potentially 52.5 million consumers. Yeah, potentially. Yeah, whether they can get it or not, that's a separate story. And then B2B, business trying to serve other businesses, SME. And when I talk about SME, it reminded me of like Ant Financial and Alibaba. And later, this so-called Alibaba will come in, which is my brother's company, right? So you can see, so they are 1.4 million. Wow, like, there's really a big slice of pie, right? Big slice of pie. But this is like a vision. Whether can they do it or not, that's a separate thing, right? But here there are many things they do. But if we can summarize into 5 things, right? High 5, right? 5 finger, right? So you can say the first finger is about spending, saving, investing, protecting, and borrowing. Later I'll go through this quickly, or not in detail, right? Now, so let's look at the 5 fingers. Remember the high 5 fingers, Now, just now, right? The CEO has said that their focus is really on Brazil. So if you look at this table, you realize that 3 columns are in green because that's where the focus is. And then after that, they expand, right, to New Mexico and Colombia. And bear in mind that all these are so-called Latin America. And of course, they provide all these services. But in short, is a banking service because they have the banking license as well as a credit card service. ATM, all this. Let me see over here. Is it ATM? It's okay, right? So this is a quick preview. Remember, 3 countries. And then just now we talk about high 5, right? The 5 services. Now the first one is related to spending. So what do I mean by spending? Remember, there's a B2C, the consumers. So if consumers pay goods, right? They can pay goods electronically via credit card or debit card, right? Yeah. So when we use our credit card, debit card, somebody along the line who provide this service will make money from us. So that's Nubank. So these are some of the things that they do. I don't want to go into detail because that's just too much, right? But you just imagine your consumers, you pay using a credit card, debit card. So they will take some cut, small little fee, right? And later we'll talk about how they make the money specifically. So remember, spending, B2C. Then the other one also B2C, a savings account, right? So in other words, a Brazilian can deposit money with the bank, just like a traditional bank. And of course, this new bank will help them manage, help them save, and so on. And then they got different type of account, personal account. DBS, I got personal account, and then my company has a business account. Yeah. So remember, they operate very similar to a traditional bank, except that they are a new bank or an online bank. This is the interesting part. So this is the part that people say, right? It's a crypto bank, right? Crypto bank. So investing. Now, investing also B2C. They provide a service to consumers, right? Now, I have a bank account with a DBS bank. So if you look at the 3 largest local banks in Singapore, so for example, DBS Bank, right? They have a brokerage company, one called DBS Securities. And then their platform is called DBS Vickers Online. So what are they trying to do? You see, they're very smart, right? They want to create a lot of service so that you get stuck within the service. So let's say I put my money with a DBS. Then DBS say, hey, Mr. Chang, you have a company, right? Do you want to borrow money? Then after that, they want to charge you interest, right? The moment you put the money, then it's stuck, it's like a spider web. Then after that, your savings account got some money. Are you interested in investing? If you're interested in investing, is it okay for us to help you open a brokerage account or the DBS Vickers Online? So you see, this is the same gimmick they're trying to do, right? Okay, the bank, you put money on me. Hey, do you want to get rich? Yeah, don't worry, you want to get rich? I have a subsidiary. Now, so what they do is, but remember, originally the new bank, only provide the credit card service, then after that, bank service and so on. So, but bank cannot provide a platform for people to buy stocks or whatever, right? So, what do you think new bank will do? If I want to provide this service, but currently I do not have this service, right? I can start one, which is what DBS is doing, right? DBS, start DBS Vickers Online. UOB, start UOB Cayden. But new bank, instead of starting, which takes a lot of time, right? Yeah, so what they did is they invest in a platform and then rename it. So that's faster, right? So a new bank acquire this so-called like a brokerage platform, which is called Easy Invest. Easy Invest, right? Then after that, they rename it to New Invest. Yeah, so that it belongs to me, New Bank, New Invest. And these New Invest, like DBS Vickers Online, UOB Cayden, right, allow retail investors, B2C, right, like us, to buy stocks. But interestingly, this New Invest actually allow investors to buy crypto ETF. Now, remember, if you are a graduate, that's why just I asked who are the graduates, right? We have Alvin, Jason, Eric, a lot. So all of you will know as ETF, which stands for Exchange Traded Fund, S&P 500 ETF, one basket of stock. Yeah. So if it's a crypto ETF, it's a basket of crypto, which may include Bitcoin and so on. So instead of buying individual crypto, right, which is a bit challenging, you can buy a basket, a container of different assorted chocolate, right? Assorted ETFs, crypto ETF. Now, it's because that new bank, right now owns New Invest, which allows investors to buy crypto ETF. Then, people like to make the article very delicious, right? Yeah, so they go and twist. It's like A own B and then B own C, right? And then they say, and then A equals to C, they play this game so that people read the article. Then this fella, right, Emma, under this Ascent, which is a motley fool, right? You see, play this kind of red herring, right? So right now has Warren Buffett become a crypto believer? Remember, Warren Buffett still do not believe in a crypto. But remember, it just happens that Berkshire bought the company, right? And the company has a subsidiary that allows people. So in other words, when they have a platform that allows people to buy crypto ETFs, they are a casino, remember. They do not buy crypto. They are not the gambler. So you must be able to differentiate this. Now, so of course, let's jump to now we are at fourth finger, right? High five, right? 5 services that they do. So just now was the third one. Third one, I spent a bit more time. So the fourth one is, of course, when we say protecting, that means I also give you insurance. I'm not very sure whether DBS got insurance or not. I don't think so. But this guy is quite smart. Now I also do insurance. And because it's online, right? Can you see online? They don't have physical office. So premium as low as $2. Wow, I think for me also quite tempting. How can insurance be so low as $2, right? Yeah, interesting. Then, of course, like a traditional bank, they also want to lend money. Yeah, lend money. And remember on the left side, right, we put all this a photo of the phone, right? Because they're supposed to be a Neobank, which is an online bank, huh? Now, and all the things that I do, it reminded me of this fella, Jeff Bezos. Jeff Bezos, huh? Now, if you look at Jeff Bezos, right, you look at his face, huh? This photo was taken many years ago, like, even though the article is 2021, right? It was many years ago when, you know, Amazon got started, huh, and so on. Then I noticed something, you know, I noticed Jeff Bezos, when he become richer, it appears that he become more handsome. Don't know why. Because more handsome, right? So you see, the reason why I want to show this is this new bank, right, sort of reminded me of like Jeff Bezos in the early days when they started off digitally and they want to dominate the internet world. Yeah. So I'm not very sure what specifically Warren Buffett or Berkshire saw in this new bank. Because when they invest, they want to buy things like Coke, right? But recently, they dabble with very small stocks like Snowflake and Nubank. So let me just carry on and see whether is this the next 10 times or 100 times stocks. Now, so just now they talk so much. No, I want to do this. My dream is do this. Okay, let's check the numbers. Because numbers tell the truth, right? So let's look at the revenue. Remember, they only got IPO in December, right? Yeah, so data, we don't really have much data. But if you look at the blue part, right, and the red part, they start off this revenue, which is here, right? And then right now is here. So from here to here. So in fact, the revenue did increase. But if you see the breakdown, right, you realize that they make money predominantly in two ways. It's two slices, right? One slice is called the interest income. Now, interest income, what does it mean? Remember, they lend money. They lend money, you pay me interest, 1%, 2%, interest income, right? Then the other one is they provide some form of services, and then they make money from the commission. Yeah. So let's relate back to you as investor, right? The key thing is that there are like 134 of you watching this. So at the end of the day, we want to tell you whether is this something that you want to explore. And if you want to put your hard-earned money into something, it's better you know how they make money. Yeah, in the early days, people lose money because they have no idea how HiFlux make money. And then recently, just this afternoon, interesting. This afternoon, our Prime Minister gave a speech, right? This afternoon, right? Gave a speech. All right, he said VTL. You know, the moment he said this, the SIA share price went up by a few percent. But I mean, what is this? What is this? The hen hasn't laid the eggs yet, but people already overpay for the hen. Now, so be very careful, Before you put in money in something, you better know what they're doing, So let's focus on these two parts, right? So we already covered the high five, right? 5 fingers, right? So right now is 2 slices, So let's look at the first slice, which is the largest part, the interest income, right? Now, if you look at the interest income, in summary, there are 3 parts, 1, 2, and 3. So this is the number one generating a segment, right, for interest credit card. Now, in Singapore, you try don't pay your credit card bill, you see how they become the legal loan shark, right? So all banks all do their prayers that you don't pay. So I don't know how much, 20 or 30%. So far, then sometimes you're kena, right? Late payment fee, then you're going to call, please, I mean to terminate. I see. So this is the kind of interest income, right? Then another one is interest. So they invest, right? They have some form of return. Now, so they predominantly 30%, highly liquid, is on government bonds, corporate bonds. So they also make some money from there. And of course, if you lend money, you collect interest. So right now, you know, there are these 3 businesses, which also means that if you happen to buy this stock, right? You know that this how they make money. Then the second one, right, is they provide some form of services and provide services. So they make money by having this fee and commission. So if you look at here, let me just remove this because this is very small, right? But let's focus on this 70%. Now, if you look at this term interchange, it sounds like a bus interchange, right? But when we say interchange fee, it simply means it's a type of transaction fee, right? That the merchants must pay if a consumer do a certain service. For example, for our training, right, we provide a 6 months installment, 12-month installment. And then we always tell the student, hey, it's interest-free. Now, when you say interest-free, is the consumer is interest-free, right? Yeah, but you know, the bank was so good, right, interest-free. So remember, the merchant, which is me, at the back end, I'm suffering, I'm paying the interest. I'm paying interest, right? So that the consumer will buy the service, right? So remember, when you go to a restaurant, you swipe, there is no interest, whatever, but the merchant is the one that's paying. So in other words, they are making money from the merchant. So under this fee, right, they make most money from all the money, 70% right, from the merchant. And the rest got other small little fee, but we skip this part, right? Now, so in short, when we buy a stock, we want the share price to like 2 times, 3 times, 4 times, right? In order for us to do that, we are buying to the company's future. And to buy into the company's future, we must know what are their future plans, right? What are their business model? And just now the CEO say, oh, you know, our customers is increasing rapidly. And if you look at the numbers, it's true, he's not lying, because the customer base actually increased exponentially. I think it's something that I really want to learn. So once you have customers, so what if they don't buy something, right? So they want to increase the revenue per customer. So first step, remember, must have customer first. If you got one customer, increase revenue, only got one. So they need to have a lot of user base, which is what Grab is trying to do, right? You see what it's trying? Grab is a money-losing business, including a lot of unicorn. So what they're trying to do is not to make money first. What they're trying to do is to acquire the customer first. So most of the unicorn are all taking this approach. So they take investors' money, burn as much as they can to acquire customers first. So that is always the very first stage. And that's the reason why they go IPO. Because their cash is burning so fast, only through IPO, then they got more cash to burn. So once they burn more cash, they have more service, so they do the prayers so that eventually, right, the revenue will convert to profit. And fortunately, they are not a traditional bank. They don't have a physical presence. So, I mean, they claim that their economic mode is really a low platform fee. Then hopefully, when revenue go up, expense come down, right, the earnings will go up. So that's their plan. But later on, let's look at the numbers to see whether their plans being fulfilled, right? So let's talk about three trajectory, right, when they want to grow their customer. Remember, the first one, like all unicorns, they must have customers. No customers, say what also no use. So how do they grow the customers, right? So they grow the customers via word of mouth, which is actually what DIA is also trying to do, like social media. I think everybody is trying to do all this, right? Then hopefully they can promote their services and so on. Then remember, just now we say, if they are a very small firm, they try to promote to their customer, but they're so small, you see, like Nike and 1,000. So they work with a partner, which is Foot Locker. So more tentacles, right? So they work with other companies such as, I don't know how to pronounce it, it's Choop, and then Remissa and so on. So this is one way how they want to grow their user first. Remember, once they grow their user, like this, can you look at all this? 3 million followers. I think later on, you've got nothing to do, right? You can go and check. You go LinkedIn, you type Nubank and see whether is it true 3 million. Facebook got 2.2 million. TikTok also have. Wow, solid, yeah. Also, I think they have some social presence. Then you go and compare, 3.7 million compared to DBS Bank. Hey, anybody, if you got nothing to do, right? Can you go to LinkedIn, type LinkedIn or Facebook, type DBS and see whether the number of followers, exceed the Nubank. Then from there you have a few, or you use Citibank, you go and compare. Then you know their social presence, right? So remember, the first method is to acquire as many customers as they can. Then the 4 million, DBS 4 million. Or Nubank now 4 million. Okay, Nubank 4 million. Yeah, so our target also 4 million. Right now our YouTube is 4,000. So I shall task Suzy to turn 4,000 to 4 million. No, I'm just kidding. Okay, so once they acquire customer, of course the next one is, hey, customers is right now in my room, right? In my space. So then I want to increase the revenue, right? Remember the second step. Yeah, revenue there, I need to provide solution. Remember, a business is providing solution to a problem, right? Yeah, then they continue to acquire more customer to provide more solutions. Second one, Now, and these are some of the companies that they have acquired, right? And remember just now we talked about this Easy Invest. They acquire Easy Invest, rename it to New Invest. And then New Invest is like a casino, right? It's like an Option Express. It's like a TD Ameritrade where they allow people to buy a crypto ETF. Remember, Warren Buffett didn't buy crypto directly, right? Now, so of course the third one, eventually, once they have the customer base, they got more tentacles, right? More working partners, then they can expand to new market. So you realize that, everything all start to fall in place. Yeah, the dots start to connect. Then this one, this is the most interesting. Remember just now I talked about the Alibaba, and then there's a B2C, and then there's a B2B, right? So you see, this Brazilian, the dream is to become a super app. Grab also want to be a super app. And if you look at Alibaba, right? Alibaba has this app called AliExpress. And they also have other app that targets retailers. So Nubank want to like copycat, right? They also want to pull retailers, which is the B2B, right? Such as AliExpress into its app. Oh, this is quite interesting. Yeah. So you can see, right, they have launched its latest venture in e-commerce, pulling retailers directly into apps so that customers right now can shop order, without leaving Nubank. So they want to form a moat. Once they put customer inside, they are really in. Oh, interesting, huh? Yeah. So in short, right now, if you are really interested, you can take a photo and about this. But remember, this video is always here permanently on YouTube, huh? So remember, this is what they do. Okay, they work with other partners, they acquire customers, so they provide more services. In short, who do they provide? They target consumers. Remember the 5 fingers, right? High five, right? 1, 2, 3, 4, 5, right? And they also provide services to SME. And this is their target market, in which the circle hasn't expanded to cover this, right? This is their target market. So of course, their dream is to become like a Amazon, right, or Alibaba in the banking space, banking space. So now of course the question is whether can they do it, and then eventually to you, is it something that that you want to explore, right? Yeah. So before I carry on, I'm going to hand over to Hillary. By the way, before I hand it over to her, just to let you know that she spent many days doing this slide. So most of the slides are done by her, so I better give the credit to her, right? Yeah. So at the back of this, at the end of this presentation, Star Wars, they always have an end credit. Yeah. So if there's an end credit, I need to put Hillary. Then her font size is like 1,000. Yeah, then Cayden font size 10. Yeah, so something like that. So from here onwards, she's going to talk about because people always say Neobank, online, like Fintech, they always associate this. So I think it's important for us to understand Neobank, what's the difference between Neobank and a Fintech. Then Neobank and a bank, yeah. So I'm going to pass this baton, right, to Hillary, right, and then Hillary will carry on. Then after that, once she explains some things, then I will suddenly appear, okay, So I'm going to hand over to Hillary. Hillary, thanks for...
Hi, good evening, everyone. Yeah, just now Cayden was sharing so amazing that both me and the camera, we are kind of like immersed into it. So it's kind of like it takes us some time to get back into the video. And then sorry to keep you all waiting. So right now, I'll be sharing my slides to explain what's the difference between a fintech and a neobank. Because when we are reading articles, they will tend to say that fintech bank, a new bank, or some digital bank. So it's kind of a bit confusing, like what's the difference between them? So I'll be the more technical person to try to explain and boil down to a simple term for you to understand what's the difference between a fintech and then a neobank. And then subsequently, we will see even deeper, like what is a traditional bank, a digital bank, and also a new bank. So the slides are ready, so I'll go on. So first off, a fintech is actually a short form of financial technology. So here says that it's an integration of technology and financial services, which is a marriage between a financial service and also a technology in order to improve and also enhance the financial processes. So what type of financial innovation that fintech has provided so far? So first off, it's a P2P lending, peer-to-peer. So that means they do not have intermediary in between. So it's kind of like person to person. They can do the lending, and also blockchain, which is the famous crypto. Mobile payments, something like PayLah. So instead of we have to always go to the bank and then transfer money, so we can easily do from our phone, like, okay, I owe you some money, so I'll PayLah you by your phone number. And then the next one is robo-advisory. So this one is very famous in the investment. So last time when we want to do investment, which most of us, if we do not learn, we are not very investing savvy. So there will be a financial service provider. They will try to advise us how to build up our portfolio, what should we invest in. But now with fintech, we can use this robo, that means an AI applicable robo-advisory to help us to plan how we want to build our portfolio, whether is it risk averse or maybe like I want to let it grow faster so that it can take on more risk, something like that. And then the next thing is online banking. So online banking itself is actually part of the fintech. So it's a subset of fintech. So fintech is so big, so online banking or neobank is just something that's small. Okay, so now we'll go into neobank. So just like as Cayden explained in the first slide, neobank means that all of the banking services, all the financial services that they provide is 100% done on mobile platform, such as mobile phone or maybe PC. So they don't have any physical branches, nothing at all. So because everything is being done on the mobile phone, so it's more technology oriented. So you can see that you can do payments via your phone, like PayLah, PayNow. You can also do savings. You don't have to go to the physical bank to do like save your money or maybe do some transfer. You can easily do from your phone. And also for SME, they can use this technology to like do their financial planning and then see how their companies is doing, and also maybe do some billing services. So they can do it 24/7 because it's always, you just take your phone and then you can access the bank services already. And then there's no physical branches, there's no people inside the branches, so they can have a lower operational cost. And because the platform, the interface on the app that they try to make is try to be as simple as possible, so it's very intuitive. It's more user-friendly, so it's as simple as an apple, just like Steve Jobs says that if something is not simple, it's not really a good product. So they try to make the app as simple as possible. With that, they also focus to give a customer have a better experience when they are using it. Like what David Velez, the CEO of Neobank, said earlier, like they wanted to give the Latin Americans to have a better experience for their banking services. So now we'll go into what type of banks and how do we differentiate between them. So first is a traditional bank, digital bank, and neobanks. So when we see traditional banks and neobanks, it's very simple, easy to differentiate. Traditional banks, they have physical branches, but neobanks, they are 100% online. But what's the main difference between a digital bank and also a neobank? Because sometimes people will tend to use them interchangeably. So when I was doing the research, it was also a bit confusing to me, like, what's the difference between a neobank and also a digital bank? So now we'll go into it and see. So first off, a traditional bank offers a face-to-face financial services. Digital bank and also neobank, they both offers online services. So that means you can do your banking services on your phone or maybe on your PC. And for traditional banks, they have a physical branches. And neobank, they are 100% digital. There's no physical branches available. Digital banks also does not have any branches, but it's actually backed by a traditional bank, like what Cayden says, that the brick and mortar banks, and then they wanted to get into digital, so they kind of like extend a branch out of it. So digital bank is actually a subsidiary of these brick and mortar banks, whereas Neobank itself is an independent startup. So they are not under any big banks. They start up by themselves. So you can see how new banks started up. They started up as a credit card provider. Then from there, when they get the banking license, they start to become slowly start to become more like online banking, more like an online bank. So for a traditional bank, in order to provide these banking services, they will need to get this banking license, which they have to fulfill very strict regulatory before they can get these banking licenses. But for neobanks, there are two types of neobanks. One is a full stack, and another one is a front-end focus. So what's the difference between them? Now we can boil down to a much more simpler terms. So first off, for full stack and also front-end focus, as the name says, full stack, that means it owns a banking license. And for front-end focus, it does not have a banking license, okay? So for full stack, because it has a banking license, it can operate 100% by itself. So it can provide the full banking services like the saving accounts, the loans, and also if anything happens to the bank, like your deposit, when you deposit in the bank, if let's say the bank closed, what happens to your deposit? Gone, is it? But if let's say the bank has certain, like some type of insurance for your deposit, then at least some of your money is being insured. You definitely don't want to say that my money is with certain bank, but then the bank closed and it doesn't have insurance. That is one of the worst case scenario lah, okay? And then for a front-end focused bank, because it does not have a banking license, they have to partner with a traditional bank, but they are not a branch of it. That means they are kind of work hand to hand together. So they only manage the app interface. So when the customer comes in, they just use the app. It's easy for them to use to do their banking services like do payments, do transfer. But the back end, all the banking services, they are actually provided by the partner banks. Okay? So this part is clear enough? Okay, so that's the difference between what is a full stack neobank and a front-end focused neobank. So in the future, if let's say if you wanted to put your money into a neobank, you have to check whether is this a full stack neobank with a banking license or just a front-end focused neobank without a banking license, okay? So now we will look into the competition and moats and maybe the industry of this neobank. So first off, neobank, for this figure, it started to track from 2010 until 2020. So you can see that from this period, it's an exponential increase as well. So it's about 295% increment from within these 10 years, within this decade. And we have a quick look at South America because earlier on when Cayden was sharing, he says that there's a lot of people are unbanked, and also the mobile penetration in Latin America is very high, so everyone has a phone. So Neobank is actually growing very rapidly in South America. So you can see that in Brazil, there's a lot of neobanks there compared to other Latin American countries. But among these, some are full stack, some are front-end focused. And then we also look into the neobank customers from 2012 until 2021. So it's also an exponential increase. From 1.3 million customers, it grows unto 77 million. So it's about 75.7 million of customer growth within the Latin America region. So you can see Brazil, Mexico, Chile, Argentina, and also Colombia. So they are taking these 5 countries. So one of the reasons like why Neobank is growing so rapidly, since we already have our traditional banks, especially in Singapore, we have OCBC, DBS, UOB, POSB. Why Neobank has area to grow? So first thing, it has a low cost because they offer online-only services. They don't have any physical branch, so there's no need for people to hire people or pay rental for the branches, so they can afford the low cost. And sometimes when it's low cost, they don't have to pay fees for the credit card, like there's no annuity fees, or maybe some saving accounts, they don't even need to pay a maintenance account. They just want people to come in and use their services. And from then on, they can earn other sorts of income from there. And then the next thing is convenience, because it's on the mobile phone app, 24/7 you can access. But if it's a physical branch, when people work, they have their own working hours. So usually when you see the bank, they will say from 9 to 3 or maybe to 4. But during that period, that's the time where most of the people are working. So in the event that if you want to use a bank or you need to go to a bank, you have to either apply for a leave or maybe you have to go during your lunchtime, which is very inconvenient. But just with your phone, you can easily access to your bank account 24/7. And also, they also provide a lot of innovative financial solutions like the millennials. They wanted to know how much they are spending every month, because right now, like, we are mostly using cards, mobile phone, so we can't really keep track of how we spend our money. So they provide this kind of like financial solutions, like you can manage your budget, you will know how your money goes or how you spend your money. And even for SME, they can also have a billing software. Last time, SME, they will have to use paperwork and then use Excel spreadsheet to do the billings. But right now with this app, it actually simplifies the process so they can easily do the billings. And also another thing about speed. Because when one wants to apply loan, if you have experience to apply for a loan, you will know that you have to go to the loan, submit the form, and then you have to wait for approval before you can get the loan, because they have to check whether are you credit worthy, can you get the loan and then repay back. Yeah. But for Neobank, they are able to cut short this application process is because they are relying on the technology. They are using the AI, the big data to analyze whether are you credit worthy or not. So yeah, they are relying on the technology and data. So maybe we can have a quick example to see how it actually happens when one wants to borrow a loan for a traditional bank and a neobank. So for a traditional bank, one has to go to the branch and then meet the representative, wait whether you can get the loan or not, and then you get a reply from the bank, and then you go back to the bank and then they say, okay, you get the loan. But how long does it actually take? It may take weeks for it to be applied, to get approved. And when we compare to a digital, that means on an online basis, you can apply on your mobile phone, and then you get approved and you can receive the funds into your bank account immediately. So I believe that right now, most of the banks, they are offering something like this. So you can get a loan as easy as 1, 2, 3, or maybe within minutes. Yeah. So this is why neobanks is growing rapidly within Latin America and maybe in the future in the world. Okay, so now we will compare between the neobanks. So you can see I've listed out 7 banks in different countries and also among Brazil. And because only Neobank is the only neobank that has IPO, all the other banks are actually private. So most of the information that we get is actually from online, so there's not much of figures that we can provide, like the revenue or anything. Even though if we can get revenue, we are not sure that how they earn the revenue or whether is it really true the amount of the revenue. So then we will see all among these neobanks who has banking license. So only Neon and Chime, they do not have a banking license, and they have to work with these three banks in order for them to provide the banking services. And then we will see the number of customers. So among the neobanks, Nubank has the most number of customers, which is 53.9 million. So how can they grow that rapidly? Like earlier on when Cayden was sharing about word of mouth referral, so you can see among within Brazil, this is the median, that means the average of complaints that they receive from 1 million of customers, and Neobank has the lowest. So imagine if you like something, you will definitely want to share good things with your friends, right? But imagine if you go to a restaurant, but when the food is like not really nice or not good, would you want to share with someone else? No, right? We will only want to share good things with our friends. So that is why Nubank provide a very good service for their customers. And in order to join Nubank, one of the criteria is that you can only join when you are invited by your friends. So it kind of create a kind of exclusivity. So everyone wants to join in, so they have to be referred by their friends. So that is how they manage to grow organically. Okay, then we look into the products. So we know that Nubank has 5 fingers, high five. So we will compare with the other banks. So first off, C6 Bank, Monzo, N26, and Chime, they also provide card services. Most of the banks, they provide savings accounts, checking accounts. And then some banks, they provided loans. Some provided investment products. And some provided insurance. And you can see that some other banks, they provide something new that we never see before, like a vehicle toll tag, or maybe bill splitting features, which I find is like, oh, quite interesting. So they are also making like more different types of services available for people. Okay, so now we'll go into the numbers to see whether Nubank is really worth to invest in. So first off, in the first, when Cayden was showing how they generate the revenue, so we can see that the revenue was actually increasing year by year. That means what they bring in initially, but we have not deducted the expenses yet. Then we will see earnings per share. But the earnings per share is actually decreasing. So what is earning per share? Earning per share, it means that for every share that we purchase, how much profit can the company generate? So for example, if the earnings per share is $1, so that means for 1 share, the company is generating $1 for it, okay? So here is the formula for it, but we will see that the earnings per share is actually decreasing. So what happened? So this one, I'll put it here first. So we will look into some of the criteria for the banks. So first off, the first criteria that we see is cost to income ratio. So what is a cost to income ratio? So for a business to work, other than bringing in the income, they will need to spend some cost in order to generate the income, okay? So this ratio helps us to assess whether is the bank profitable or not. So this is the formula. So the cost to income ratio is equals to how much is the operating cost divided by the operating income. So in order for the bank to be profitable, the income ratio, is it the higher the better? So in order for the income ratio to be higher the better, the operating cost has to come down, but the operating income has to increase. So with such, the lower the ratio, the better. Yeah, sorry. So the lower the ratio, the higher profitability, okay? So we will compare within the region in North and South American countries. So in Brazil, the ratio is about 0.6. In Colombia, it's about 0.5. And in Mexico, it's about 0.5. And then we also look at US, it's about 0.6. And then we also compare the region in Singapore, it's about 0.4. So we can get a rough gauge about the average ratio is about 0.4 to 0.6. And now we will look into the operating expenses. So we can see that the blue one is referring to 2019, the orange one is referring to 2020, and the gray one is referring to 2021. So we can see that in 2021, the general admin expenses are increasing exponentially. And also the expenses are also like at red because they are expanding a lot. And why is it like suddenly such a huge gap for the general and admin expenses? Because in their financial statement, they mentioned that they are expanding and then they need to have more headcounts to cater for the services. Because even though they are working on the mobile app, they will still need people to design the app, the developers to work on it. So that's the reason why there's this high expenses. And then for the operating income, so what is an operating income? An operating income is actually the revenue minus off the cost of goods sold. The cost of goods sold is the direct cost in order for direct costs involved to provide for the bank services. So that means whatever bank services that they provided, the cost that involved in that bank services, that is the cost of it. And then operating expenses is what we saw just now. So after we minus off the cost of goods sold and also operating expenses from the revenue, this is the operating income. So we can see that the operating income is actually at a negative. So when we plug it back into the formula, the operating cost is negative, and the operating income is also negative, which brings up the ratio to be negative. So it's
operating cost positive.
Oh, okay. Operating cost positive.
Operating income is negative. That's why.
Okay. So it brings up that it's not profitable at the moment. Okay. And then now comes back to net income. Because earlier on when we were looking at the earnings per share, we see that it's net income divided by how many shares that the company has. So how does net income comes about? It's the operating income earlier on that we see. Then we minus off any taxes, any interest that the bank has. Then it becomes its net income. So net income is actually the profit. So we can see that the net income is actually negative at the moment. So this is the reason why the net income is negative and the earnings per share are actually dropping at the moment. Okay? And then the next criteria that we see for a bank is a loans to deposit ratio. So what does it mean to be a loan deposit ratio? It indicates that how much is the bank lending out its deposits in order to earn the interest income. Okay. So and according to value investing methodology, an ideal loans to deposit ratio is actually 80 to 90%. So what does this actually mean? So for example, if let's say this LDR ratio is about 80%, it means that the bank loan out 80 cents for every $1 it received in the deposits. Yeah. So we will look at Singapore banks. So the LDR ratio is about 84, about 80 plus range there. So it's quite good. Now we will look into the Nubank. So the total deposits is actually increasing year by year. So that means that they are having a lot. They are able to loan out the money to the customers. So the loans for the customer, you can see that 2018 there's no loans at all, but 2019 onwards, the loans to customer are actually increasing because the total deposits are also increasing. But why does 2018 it does not have any loans? It's because when you see from the timeline, they start to provide the bank account in 2017, but when 2018 they gain the banking license, now they can provide the personal loans to the customer. So that's why from 2019 onwards, they have the numbers shows that they are now starting to loan out to customer. And we can see that the loan to deposit ratio for a Nubank, this is the formula for the loan to deposit ratio. So it's total loans divided by total deposits. And it's increasing quite high from 2020 to 2021, from 3% to 12%. But when we compare to Singapore banks, it seems like it's still a bit they are not really lending out a lot of the deposits out. So maybe they still have more rooms to grow. So I'll put a question mark here. And then another criteria that we see for a bank is a non-performing loans. So what is a non-performing loans? So from this chart, we can see that first, Angela needs a loan. Maybe they need a loan to buy a car, buy HDB, or maybe buy a house. So they don't have the cash up front, so they wanted to borrow a loan. So Angela will go to a bank to borrow a loan, And then now the bank will see whether Angela is credit worthy or not. Okay, so Angela will pay back as planned. So that means it's a good loan. Yeah, so that means the bank did a good business with Angela. But if, let's say, economic crisis, Angela cannot pay back the loan, so the loan becomes bad. So this one is known as a non-performing loan. So that means the loan cannot be paid back, and Angela actually defaulted on the loan. Okay, so now we will look further deep into it. So this is the formula for a non-performing loan ratio. So it's a non-performing loan divided by the total loans. So first off, the borrowers, they are struggling to repay the loans. So it causes the non-performing loans in the bank financial statement to increase. So now the bank are less profitable because they cannot get back the money, so they cannot earn the interest income, and they are becoming less willing to lend. So the non-performing loan ratio will be increasing. So according to the value investing methodology, non-performing loan should be less than 6%. Okay, so we will look into Singapore Bank. So usually Singapore Bank, the range is about 1 to 2%. But how does Nubank works? Okay, so now you can see that for Nubank, we remember that non-performing loan should be less than 6%. And then we can see that the black line is the general market, and the purple line is the Nubank. So 15 to 19 NPL is actually referring to 15 to 90 days. Okay, so it's actually comparably with the market. It's lower than the market, and it's also lesser than the non-performing loan of a 6%. And then 90 plus NPLs is referring to 90 plus days. So you can see that comparing with the market, Nubank is still lower. So actually Nubank is performing quite well for the non-performing loan at the moment. And another reason is because they are not loaning a lot, and they are very careful to loan out the money to who. So that's the reason why the non-performing loan is a bit low. Okay, so now we'll look into the return on equity. So this is the formula for return on equity, and according to the value investing methodology, ROE should be more than 15%. So what does this actually mean? So it means that for every $100 that the investor invested, they wanted to get $15 back. So this is what it means. But from here, we can see that the ROE for Nubank is actually negative. So I'll give it a cross, which is it does not pass. And then now we will look into ROA. So ROA is actually, this is the formula for ROA. And then for banks, it has a slightly different ROA criteria, which should be more than 1%. Okay. So for banks, what does this ROA means? That is for every $100 that invested into the asset. Now this one is invested into the asset. We will want the asset to generate $1 back to us. So this is what ROA means. So now we also see that this ROA is actually also negative. So I'll give it a cross, so it does not pass. Okay, so next we will look at how the cash flow actually works inside Nubank. So we can see that in 2020, it was actually positive. But then when it was 2021, it has a huge drop down. Why does this happen? Okay, so now we will look into the cash flow statement. So we see that there's a huge amount of money was actually given out to securities, deposits in the central bank, because in order for a bank to work, they need to have certain deposits inside a central bank. And also there's also credit card receivables and also loans to customer. But in the meantime, they also get some cash from deposits and also payment from the credit card network. So this is why there's a huge drop in the operating cash flow. And for the free cash flow is actually just now the operating cash flow minus off the capital expenditure. So what is a capital expenditure? Capital expenditure is referring to the assets that's more than 12 years. Okay?
12 months.
Oh, 12 months, sorry. More than 12 months. Assets more than 12 months. So same as just now, the operating cash flow is also going downwards. Okay. So now for banks, we will look into equity and to asset ratio. So this means that how much of the company's asset actually owns by the investors. Yeah, don't understand, right? I also don't understand, but I'll show you shortly. So we will look at this at the balance sheet formula. So for a balance sheet, and assets is equals to liabilities plus shareholders' equity. That means how much the shareholders invest. So for this ratio, it should be more than 0.1%. Okay, so we will look into a more mathematical formula to easier understand what does this actually means. What does this ratio actually means? So equity over asset more than 0.1, we will see that in numerator and denominator form is over 1 over 10. So that means, and we plug into the balance sheet formula, asset is equals to liability plus equity. So what does this actually means that for every 1 equity and also $9 liability. Yeah, okay.
Which means that every $1 equity, right? Yeah, there is $9 of liability.
Yes. For every $1 equity, there is $9 of liability. And in order for it to be more than 0.1, we will want to have the liability to as low as possible so that the equity to asset ratio will be more than 0.1. So this is what this ratio actually means. Okay, so we will look into the Nubank's equity to asset ratio. So 0.1 is the red line. Then we can see that it's actually positive. So we will see that actually for this criteria, Nubank actually passes. Okay. So now my part has already ended, and then I will pass back to Cayden to further explain on the possible risk that Nubank may have, even though the financial statement does not look really good at the moment. So with that, I'll pass back to Cayden. Thank you.
Welcome back. Now, if you look at the, I've just shared screen, right? Now, if you look at this shared screen, remember for our PNWA or VAA graduates, we have a closed group, alumni group there. And then can you see here, actually Hillary, the lady who just spoken, right? She said 1 deal closing soon. So this kind of services that we're talking, level 1 Bangkok first merchant has obtained all regulatory approval, right? That means all sure is confirmed, right? Shareholder also check off the deal closing, right? Monthly spread 8.85%. Now, in case some of you who are watching this, you are our graduate. Most likely, I'm going to do a urgent meeting, right? Urgent meeting where I'm going to execute the trade, right? Yeah, and then if nothing goes wrong, my ROI will be 106%. But of course, it's not only me, right? It's me and you, right? Provided you are a PNWA grad. And just now, Daryl has a question. Is this an online or Zoom or face-to-face? It's a face-to-face, because a lot of hands-on, right? Yeah, so if it's hands-on, it's quite difficult to do Zoom. And the last thing I need is on a Saturday at 9 to 6, I talk to one hole, right, which is the pinhole. So don't want I see you. Actually, just to let you know that if I do on site, there's more cost to me, because the rental and so on. If I do online, actually, it's quite easy. Quite easy. I can wear just shorts, right? But I want to be on site, and the intention is really to serve you better. Serve you better, right? Online become like Nubank or Nubank. I'm like traditional brick and mortar fella, right? Now, so the link is already there, posted by our teammate Adelina, right? She also put the email, she also put the WhatsApp. Now, so let me just draw the conclusion in about 5 minutes. Now, just now we say so much about Nubank, really spent a lot of effort. When I say we, as in 99% is Hillary, 1% is Cayden. So she really spent a lot of effort. Now, so let's look at the valuation. Assuming that, okay, not so good, but I want to join Buffett, right, in this journey at 0.3%, just buy a lottery ticket, right? Now, so let's look at the different valuation method. But of course, for the PNWA, we are going to learn more, right? Also, maybe I just need Susie's help to just close the glass door because I could hear my voice inside. Yeah. So the first valuation method is actually earning based. What do you mean by earning based, right? We can estimate the intrinsic value based on the profit that the companies make. But if you look at the profit, negative, 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 negative. Yeah, so it seems like it's more negative. Right? So it's a downtrend, right? The downtrend is more negative, right? So even though the customer base acquisition has exponentially go up, but it's still not reflected in the profit. And because the profit is negative, I cannot put intrinsic value to it. So this is one aspect. So there are many valuation methods. So this is one. This one, right? So how about look at the cash flow base? So I was thinking maybe I could calculate the intrinsic value, right, by looking at the cash flow. So second one, So if I look at here, the cash flow also become negative. Yeah, so cash flow become negative. So right now I also cannot estimate the intrinsic value based on cash flow. So one is profit and loss statements I cannot do it. And then for the cash flow statement also cannot do it. So right now, let's look at the balance sheets, right? Balance sheet tracks what you own and what you owe, right? Now, this is the balance sheet. Assets are quick revision, right? Assets are what the new bank owns. So the new bank owns a lot of things, like property, all this. But if you look at this, like intangible, 13.2 million. I mean, I'm just thinking, what is this? Intangible, cannot see, cannot feel, right? And because they go around acquiring companies, when they acquire a company, they have to pay a premium, right? This premium eventually will be recorded as goodwill. Yeah, but goodwill is 0.8. Yeah, so plant property, 20.5. Now, then receivable. Receivable, that means money they're supposed to receive, but haven't received yet. So I'm going to remove all the crap, right, and focus on things that if I walk inside Nubank, I walk inside their company, I say, hey, I'm going to invest in a company, this X dollars I'm going to give you, show me what you have. So if they show me all this intangible, it's useless. So when I look at it, I realize that only a few items are valuable. One is the cash and the cash equivalent. There's a cash equivalent over here. There are money market funds, right? Investment, right? You have highly liquid. I could sell and I could take back. And then here, right? Remember, the securities investment are either in the government bonds or corporate bonds. So all these things are liquidable. If I buy, I can just ask them to sell and take back the cash. So if I add these three items, 1, 2, 3, it's actually this at the back is millions. Yeah, I could get back this amount of money in cash. So now the question is, would I pay less than this to take over the whole company? Now, bear in mind, this is what they own, right? The assets. Right? The company still have a huge chunk of liabilities. So the liability is actually 15,000 million. So it's 15 billion, right? So if I take the assets minus I take the liquidable assets, which is a more conservative, right? That's why I put here conservative NAV, minus the total liabilities, right? I have negative, negative. So in short, wow, cannot, how to pay, right? How to pay for a company where the liquidable assets minus this is negative? Well, I find it very hard to give money. But of course, there's always a traditional way, right, of evaluating, which is using price to book, price to book. Now, price to book, and then we're using the book ratio. We're assuming that all the things that they report is true, is worth as much, and so on. So you realize that the price to book ratio, book value per share, or sometimes known as net asset value per share, right, is actually 96 cents. Let's make it $1, make it easy, right? US $1, right? So right now the share price is about 7.91. So I take 7.91 divided by 0.96, right? 7.91 divided by 0.96 over here, right? Is equals to 8.2. So what does this mean? 8.2, that means for every dollar of book value, right, that they have, I'm paying $8 more. Yeah, $8 more. That means I'm overpaying by $7. So one more time, they have $1 worth of something, right? I'm overpaying by $7. If I'm overpaying by $7, I'm thinking, then you take me 7 years to just break even, right? From the balance sheet. So if I buy the stock right now, based on PB equals to 8.2, that means I must do my prayers that the company's profit and loss statement and cash flow statement must go up. It cannot be negative. In the future, 1, 2 years, 3 years, it must go up to generate more cash for me to break even first. So in future, can it go up? I'm not sure. It sounds quite exciting, revenue grow. They are the next online bank. It sounds quite exciting, but it's just that right now I'm just buying based on the sales pitch. So I'm not very sure. So I'm just guessing maybe there is something, right, that Warren Buffett or his successor know that I don't. Okay. Then I also look at other valuation. Right. Then I found this valuation by Morningstar. Morningstar actually has a valuation based on the future. I find it quite exciting, right? So the share price is 7.91, and then their estimated intrinsic value is 7.71. Then here, very interesting. Morningstar say the economic mode is white. I rarely see Morningstar's mode is white one. Even a good company sometimes is narrow, or they don't have, but it's white. It's quite interesting. But in short, based on value, based on the Morningstar, right, it's a fair value. It's not expensive, it's not cheap, but it's a fair value. Fair value, So look at this. Just now when the CEO was speaking, right, and then at the back was dang, 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 dang. So remember, Nubank goes public so the company is not making money. The balance sheet doesn't look so fantastic. But the stock market, investors overall, including institutions, they say, hey, this company is the valuation is 41 billion. Now, don't be fooled by this. A lot of people say Grab, right, valuation is here, property guru, but none of them make money. So you have very careful, huh? So this looks like a good sales pitch, right? You have to be very careful, huh? Then can you see here, right? Nubank's valuation up to 41 billion, higher than the country's largest bank. I don't know how to pronounce this. Yeah. Oh. So what they're trying to say is the stock market is saying Nubank, right, is worth more than the existing largest bank. Can you imagine somebody start a digital bank in Singapore, and then they say, oh, this digital bank is worth more than DBS. Wow, I think, well, this is, I find quite interesting, huh? Okay, so let's look at the share price. I'll see whether you have the guts to press buy or not, huh? Now, when the company was IPO, right, it was at 11.85. And then right now it's 7.91. So in other words, since those people who bought the stock IPO, huh, today, right, they're sitting on a paper loss of negative 33%. Yeah, I think that includes Buffett, or rather Berkshire. Okay, so in the future, I am not very sure. Now, be very careful, huh? Even if you jump inside, right, and then you buy what Buffett buy, you know when he buy, what he buys, how much he buy. You may not know when he sell, because after he sell, usually the share price will drop. And by the time you want to follow, you want to sell, it's too late already. The share price will drop. So be very careful. Don't follow Buffett shamelessly, right? So this is my second slide. So last reminder, remember, Nubank is a lottery ticket to them. It's only 0.3%. But overall, you know, as a business owner myself, I hope that Nubank will do well. They'll become the next Amazon. I hope that those people who bought the IPO shares, right, for Nubank will do very well, 10 times, 20 times. I also hope that Buffett is right. I mean, Buffett is Buffett, right? I mean, who are we to go and criticize him, huh? So let me just summarize. The last part is Hillary has nicely said that, remember, you know, if you want to buy, the reason why you want to buy is they are the largest Nubank in Latin America. They have the highest number of customers. Now the only question is how to monetize, right? Yeah, full stack Nubank, that means they have a license, right? Because some people, they are, I don't know, half stack or whatever stack, right? They got no license, right? And their revenue is increasing. So we are betting that while the revenue increasing, because the customers is increasing, they could manage their expense so that one day they become profitable. Then of course the cons, right, is number one, don't make money. So revenue is vanity, right? Profit is sanity. So right now still insane, not sane yet, right? They are burning money. So they must burn until one day, like Grab must suddenly become profitable, right? And remember, if there are no cash, they're losing money. If there's one more downturn, if there's another new bank, right, what is going to happen? Yeah. So this is, so remember, investing, right, is about having less wrong and more right. And I still remember Charlie Munger has a saying, right? He said at the end of the day, at the last slide conclusion, right, you can only have 3 scenarios. The first scenario, you have to ask yourself, is this investment, right, a low risk, high return investment? So it's either a yes or no. Is this investment a high risk, right? High ROI investment. Then take third one, is it a high risk and then low ROI? I mean, nobody will be so foolish to buy this, right? So I think 3 is out. 3 is out. So Charlie Munger say 2 is too difficult. Yeah. So of course their biggest bet is here, low risk, high return. But strangely again, they bought something that appears to be high risk. So I leave it to you, right? If you think there's 1, you know, then you decide. If you think there's 2, it's also up to you decide. Because ultimately, you know, for me, I cannot tell you what to do, right? Because you're the one to hold the money. And if you really want to press buy, right, remember, theirs is 0.3%. So I'm going to end with my final slide. I think at the end of the day, we want to invest, you know, sleep nicely. You know, I purposely choose this photo intentionally, right? You see, in the early days, my father was a fishmonger, and I fell in love with fishing. So I went fishing as a small kid with my father. So when I go fishing, I think life is really good. You just sit there and then basically do nothing. And then the fish will come. The fish will come. Don't know why the fish quite foolish. The fish will come, right? Yeah. So the fish came. So I like this photo is because it's like you know, while I'm fishing, right? It's like fishing with Buffett. And then the fish come. It's like the passive income come. Then Warren Buffett has this very funny quote. Give a man a fish, you feed him for a day. And then teach a man to arbitrage, you will feed him forever. So this is my last slide. The link is also there. Now, in case 130 of you are some of you are our PNWA graduate, right? Maybe you can just do me a favor if you want, if you find that you want to recommend this to your fellow peers who are like sitting on the fence whether to join or not to join. Maybe you just do me a favor, just type what if we value add to you, right? Using this project never work again. Just have to type what, and then I just need Adelina's help to just sometimes type what the chat goes up, right? And then the link went missing. So the moment people type what, you can just constantly post the link, right? So that they can reach out to you. So with that, we're going to end our session so that you can have a good break. Wow. Initially, I planned the session to be 1.5 hours, so we overshot by providing great value, right? So just to let you know that we are VIA and our tagline is what lah. So we hope that as long as I leave, VIA will be around, and then we want to grow together, right? So that we can make more money lah. So just take note, VIA stands for Jason, thanks. So VIA stands for Value Investing Academy, right? And our mission in life is, we want to add value to you, is we care to make you a better investor. So with that, good evening, Manfred, Jason, thanks, right? So I shall see you quite soon. Some people shy, right? They don't want to post. Alicia also what. Okay, so thanks. I shall see you quite soon. So remember, click on the link. Do join us for our PNWA, and we shall see you soon. Okay, have a good evening. Okay, goodbye.